Hello, everybody. Green Effect Podcast, Season 3, Episode 17. Took a week off, Easter, family. God, that's a lot of work. But took a week off, but let's get fired up with some really cool stuff. So, a few things we talk about. Current state of the market. Got to talk about that. Getting a little hairy out there. Bank of Canada, Tiffyboy, my BFF, my glass half full brother. He's did his announcement, didn't do anything, but commentary is important. We talk about that. Had a little bit of a marshmallow roast up in Vaughan, the city above Toronto, the city of Vaughan. Had a bit of a problem there with a fire, and some pre-construction homes went up in flames. We talk about that. Finally, we get into pulling your credit bureau, okay, as part of the mortgage pre-approval process. I posted on social media. I've got a blog post about it, and I am putting it on my podcast. I want to dispel the myths about looking for the right mortgage solution and credit bureau pulls. Okay? We talk about that on the podcast. Let's get going.
Welcome to the Green Effect Podcast. Finance, life, business, and everything in between. And now, your host, Stephen Green.
Hello, everybody. Welcome to the Green Effect Podcast, Season 3, Episode 17. I missed last week. Man, it has been busy. A lot of activity on the market. People wanting to jump off the sidelines and see what they can afford. So my apologies for all of my arguably adoring fans. My apologies, but we are back now for Episode 17. Let's get at it. All right, so let's talk about what's happening in the market. I think a lot of people jump on this podcast real quick just to get a feel for what we're seeing out there. And so my first comment is it's getting busy, all right? And listen, I'm going to make this comment. Whether you're a realtor, a mortgage person, a client, even a client in business, there's this sales technique out there that when you're asked how the market is, you should always say, it's so busy. Well, I really think you got to sometimes ask yourself, busy with what, right? So I think many of us are busy. The second that fixed rates started to drop, everybody got, quote, busy. And I think, depending on the volume you do and that sort of thing, it is very busy, right? But it's also very busy with appointments. It's busy giving advice to people, right? There are a lot of closings, for sure. It's happening, but busy with a lot of activity right now. And that's okay. That's how business goes. I don't know if I'm shattering someone's dreams with being honest with people on this, but it is definitely busy. But let's just do some simple math, folks. If everyone's kind of saying they're busy and the numbers aren't there in the market to reflect it, even with people, you can argue, well, the number of sales are down, but what about all the people refinancing? Yeah, there's not a whole heck of a lot that going on anyway. That's really bad English. But, people, it is tougher to afford things. And I think as a broker, that's where I need to, or any broker for that matter, really needs to provide solutions to clients. I told a client just yesterday, I said, hey, listen, you can afford what you're looking to do, but we may need to go to an alternative lender to do the purchase side of this transaction. And here's the reality. These days, if you're taking a HELOC product like a Scotia Step or an RBC Home Line or whatever they call it, you're qualifying at 9.2%. It's not chump change, right? Whereas a year ago, you were qualifying at, 5.25, 6 and a bit. Like, it's a very different qualification process. So the long story short, it is busier. 100% it's busier. I'm definitely busier, right? I'm back to probably that, anywhere between, 10 to 20 appointments a week, right? But it is one of those things where it's busy, but a lot of pre-approvals, a lot of things are prepped. We just need people to pull triggers on things, right? So let's just all be honest, folks, where things are. And I hate it when I talk to someone like, I'm so busy. I talked to one guy and he's like, I'm slammed. I'm like, slammed doing what? Like, just be honest, man. Let's not kind of go down a crazy asshole here. Anyway, moving on. Let's talk about some of the fun things that's happened over the last couple of weeks, and I'll give you my 2 cents, arguably my thoughts at a discount. But Tiffyboy and friends got together, and as expected, thank the baby Jesus to steal a line from one of my favorite radio hosts, Bob McCowan. But thank the baby Jesus, he did not change anything or surprise us. I think we all expected the prime lending rate in Canada to stay the same at 4.5%. But you worry about what these guys are thinking. That's my biggest concern. What do they want to go for the shock and awe factor? But again, I always say this, less important is the actual rate move, and more important is the commentary. Okay, so the one thing he did mention in his comments, and here we go, hashtag shameless plug coming. Make sure you check out my social media and TikTok, because I do talk about his commentary a little bit there, where he basically did say they feel they're on track. God bless them. They feel they're on track with inflation decreasing. I know the whole country kind of, especially in the financial world, holds their breath every month when the inflation report comes out, but he strongly feels they're on track. I believe it was down to 3% by the fall and by 2% by end of 2023 or something like that. So, Tiffyboy's feeling good, and hey, when Tiffyboy feels good, I feel good too. So we definitely see reduced spending, right? We definitely see people not making huge purchases. So, let's kind of see what happens here. What concerns me, if that's even the right word, I always say this to everybody, right? The second us amazing Canadian folks have hope, remember, hope, we're going to get right back on the bandwagon. And sure enough, that's what's happening, right? Where the market is picking up and people are getting off the sidelines, right? So, and I'm going to make this comment, a slight digression on what we're talking about, but I'm taking full credit. I've been saying this for months. This increased activity, hoping it doesn't impact the Bank of Canada and our glass half full, rainbows and lollipops, Tiffyboy. I think I've been saying this for months, okay? No one's been buying. No one's been selling. Builders aren't building. And we have record immigration, which I'm going to post about on social media this week. When we have all of a sudden in the markets things going over asking in 30 offers, because that's what's happening right now. The hell did you think was going to happen? Like, seriously, I've been saying this for months. And when I say we, I don't know who I'm talking about, but the economy in general, we've been bracing for this. We've been prepping this a little bit, right? Nothing's happening. People are getting antsy, right? There's a little bit of hope with lower rates. And so to bring this full circle, I hope it doesn't impact my good friend Tiff and what he sees the economy, the direction the economy is going. So sorry I went off some different directions there, but there really are some different kind of, we'll say trigger points with this. Okay, so we'll see what happens with Bank of Canada. Hopefully that everything keeps going on a positive direction, but we're seeing 30 offers on a house, or, I had one property I saw there, 700 end townhouse in Hamilton, a couple of months old, and it went for like 8. They listed for $699, went for $820 or $30 or something crazy like that. But 21 offers. What are you gonna do? All right. So see what happens with Tiffyboy and his friends. Moving on. So. Oh, let's talk about this. This is awesome. Like, listen, we all love a good conspiracy theory. Let's talk conspiracy, all right? In the city above Toronto, the city of Vaughan, they had 71 units up in flames. I saw 71, I saw 20. I'm just looking at the website for the most recent number. But basically a bunch of pre-construction, wait for it, $2 million homes that were sold end of 2021, early 2022 at the height of the market. Yeah, write that one down, okay? Basically went up in flames, All right. They were not completely built. I guess it was just right for a fire with just wood that was up, and it went up in flames. So I feel bad. I feel bad for the folks that could probably afford these homes still, or they did the right prep work or whatever. But let's just fire up the conspiracy theory, okay? Let's face it. If these were 2 million at the beginning of 2022, they ain't 2 million anymore. So, I mean, who knows? I'm sure more investigation will come out. I feel bad for the builder. And I've said this part before too. Man, this podcast is just Steven, myself, coming up and saying I've been saying this for years and months, okay? The builders have been... Builders are builders, right? And I think for the last X number of years, we've had builders, I don't want to say lose money, but people have been making a lot of money off pre-construction. They buy a condo for 200 grand, in 2015, and then it ends up being 800,000 by 2019. So listen, people have made a lot of money, okay? I get it. When you buy a new construction, you're buying on speculation. It is what it is, okay? Well, now we're going the other way around, obviously, okay? Where now it's these properties that the builders have contracted at $2 million are now dropping in price. Well, is this the builder's problem? I don't think so. It just, people have been winning the game for so many years that nobody realized or thought to ask, or whatever way you want to look at this, that you can actually lose money on buying something on speculation. So here we are. So I think, we got to learn our lesson going forward. And again, I'm not here to say I knew this was going to happen. I didn't, right? But now people have to be smarter about this. If you're going to buy a house on speculation with a year or 2-year closing, folks, it is what it is. Do your due diligence, or make sure you've got a pretty solid plan B in case something goes wrong. Because here's the thing. If you can't close, you will lose whatever deposit you put down with them. Okay, you could be sued for the difference. So if you agreed at 2 million, it sells for $1.5 million. You can be sued for $500,000. And I can tell you right now, a builder's going to go after that. Right? They're bigger. They got probably better lawyers. Whatever. They're going to go after that. So if you're going to buy new construction, man, think about it first. Make sure it's something you actually can afford and understand the risks associated with it, okay? And of course, shameless plug, I'm a mortgage broker. I can maybe help with some advice on this, so hit me up. You know where to find me. All right, let us move on. So I touched on this earlier in the podcast. Let's just talk about it one more time, okay? House prices in beautiful Canada are going up. For any of you who understand supply and demand, okay, I've posted this on social media constantly, consistently, I think is the right term, whereby people are still not selling. You got to understand, we could have a lot of people who have purchased in the last few years or refinanced in the last few years that can't sell because they could be possibly underwater on their house. So you have reduced volumes. I mean, there's a lot more other reasons. Like, for example, maybe I'm saying, I don't want to move right now because I got a great rate on my current mortgage. And maybe I just don't want to add more funds and have a bigger mortgage at a much higher rate. You know what? I'm happy. For the first time in my life, I'm not just going to move. I'm just going to stay where I'm at. Imagine. So we have reduced supply. But as I said earlier in the podcast, we have increased demand. People want to buy homes, okay? They haven't been buying for 8 months because of all the uncertainty. So, reduced supply, higher demand, let's do some math. Clearly, house prices are going to go up, and they are going up. You buy a house today, April 2023, it is more expensive than when it was up December 2022, okay? So, what do we do with this? Fantastic question. I don't know, because I don't know if there is a perfect answer unless a government agency in OSFI, somebody steps in, because it's a mess. It's a bloody mess right now. And I think what really has to be understood is that when and if you're jumping into the market right now, you almost have to look at the analysis. What kind of property am I buying, right? Am I jumping into an $8 million property or $1.3 million or whatever that may have risk down the road? Or do I go a little more conservatively, live well within my means or below, not worry about the beautiful home and get something where, maybe I can sell later on, which is actually, it's a good asset to unload, right? So house prices going up, demand going up. Again, a little bit of a digression here. Listen, make sure you're working with the right mortgage person, okay? I've said it before, I'll say it again. If your mortgage person is not going through process, is not available to have a look at properties before you put an offer in, available for questions, you gotta be looking on. And I know a guy, just FYI. Let me know when I can introduce you. Anyway, with the market getting a little crazy, just make sure you got the right professionals around you, because I've got flashbacks of 2021. So and funny enough, as a mortgage person, my job's actually a lot easier when everyone just goes firm on everything, because as a mortgage person, a mortgage broker agent, you should be doing your due diligence with your clients. So I do my due diligence with my clients. I say, these are your risks. You're a high risk, a low risk, a medium risk. If you choose to go firm, it's your call. I'll give you the tools to establish what risk level. You take it from there, right? And so my job's actually a lot easier when everyone just goes firm. It's so much easier because we warned you, so if something goes wrong, you knew, right? Having said that, that's not the right thing for people, like for clients, right? So if we go back to that world, I hope we don't. But again, I'm getting these flashbacks of what it used to be like. So let's see what happens as I record this podcast. It's mid-April. Let's see what happens with the April stats. But I can almost guarantee you we're going to be seeing more increases in prices yet again. Okay, I want to finish off with one thing here. And I posted an article about this because I was getting this question a lot from clients. And probably because there's such a misconception out there about when you're shopping around for a mortgage and your credit bureau being pulled. Okay, so I've posted about this on social media just last week. I want you to definitely please take a look at it. I did some research, okay, because everyone's paranoid about this, rightfully so, I might add. Because I think we're coming out of a time where we probably had so many new mortgage agents, brokers, specialists, people who have the ability to pull someone's credit bureau, and they've pulled it without consent or without knowledge. So let me just address this. First of all, before anyone pulls a credit bureau on you, they need consent. Like, it is what it is, right? But more importantly, people ask me this almost 3 or 4 times a week. And I did a blog post, so I'm going to just mail it to them so they can just have a look at it. There is a process within the credit bureau agencies, Equifax, TransUnion, whereby if someone pulls your credit for a mortgage inquiry, if there's 2 or 3 in a short period of time, anywhere between 30 and 45 days, the bureau actually doesn't report, it doesn't deduct you on your credit score based on multiple inquiries. Okay, so let me repeat that. If there are multiple inquiries on your credit bureau for mortgage purposes in a short period of time, 30 to 45 days, okay, it is not counted as multiple inquiries because the bureau knows it's for a mortgage. It identifies it, okay? So I want to just address this myth. It's on the Equifax website. It's on a blog post. I post it on social media, and I'm doing it on my podcast right now, so we all know the answer to this question. Okay. If you have questions, don't call me. Call Equifax. They can address it. No, I'm just kidding. Call me if you have questions. Email me, and I can definitely point you in the right direction of that blog. But I just wanted to put it straight on the Green Effect podcast today that is how this works. Okay. So you don't have to be fearful of trying to establish a relationship with a mortgage broker or agent or specialist because you're worried they're going to pull your credit bureau. Okay? So, any more questions, let me know. All right, my friends, that's it. Lots of little quick hits on this podcast. Remember, like me, follow me, love me. 5-star review is definitely preferred. Okay. And if you have any questions, I'm around. What is it? Stay fit and have fun.
Thank you for listening to the Green Effect Podcast. Subscribe to this podcast on iTunes or Google Play so you catch the next episode. And don't forget to leave a review. Much appreciated.